Ladies and gentlemen, good day and welcome to Aditya Vision Limited 2QFY25 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Percy Panthaki from IIFL Securities Limited. Thank you, and over to you, sir.
Hi everyone, good evening and welcome to the quarterly call for Aditya Vision Limited. I have on call with me Mr. Yashovardhan Sinha, Chairman and Managing Director, and Ms. Yosham Vardhan, Whole-Time Director. I'll hand over the call to the management for their initial comments, and then we'll open up for Q&A. Over to you, sir.
Hi, Percy. Thank you. Good evening, everyone. We are delighted to welcome you to our earnings call for Q2 and H1 FY25, where we will review the company's financial performance and strategic decisions. Our investor presentation has been uploaded to the screen, and we hope you have had a chance to review it. We are pleased to report a strong performance in typically seasonally weak quarter, showing consistency across all financial metrics. As mentioned previously, seasonality plays a significant role in our operations, with Q2 being our weakest quarter due to the monsoon and Shraddh period. Despite these challenges, we achieved good revenue and profit growth. Sales in Q2 remained modest due to heavy rainfall and flooding in most part of northern Bihar and UP, followed by Shraddh period, leading to a blended year-on-year revenue growth of 20.03% in Q2 FY25. We opened 6 new stores during this quarter, 1 in Bihar, 2 in Jharkhand, and 3 in Uttar Pradesh, bringing our total store count to 156. We added 11 stores in H1 FY25, and in line with our guidance, we are in process of opening another 15 to 18 stores in H2 FY25. As on date, 18 stores are in work in process, which hopefully should be functional by February 25. As of September 30, 24, our inventory stood at rupees 439 crore. Our inventory is on higher side due to pre-stocking for the festive season, where most part of the festivities, including Durga Puja, Dasara, Dhanteras, and Diwali, fell in a single month of October, and hence urgent quarter-end stocking was required. The finance cost during the quarter includes interest cost of 4.68 crores as lease liability interest owing to application of Ind AS 116. As announced in our last earnings call, we are happy to inform you that we have completed a stock split in 10:1 ratio. Consequently, with paid-up value of shares of rupees 10 each has been split into 10 shares of rupees 1 each, and also our shares have now been listed on NSE for trading, as well as giving investors more liquidity and trading options. In line with our strategy, we have established our presence in most part of Eastern UP and are now poised to expand into Central UP in H2 FY25. Our focus remains on expanding our retail footprints through fortification of existing locations and exploring new markets. We will continue to identify and enter new markets in Hindi heartland that offers huge growth potential. We are on track to add 25 to 30 stores in current financial year and target to reach around 200 stores by FY26. I will now hand over the floor to Ms. Yosham Vardhan to provide an overview of the financial highlights for the quarter and half year ended. Over to you, Yosham.
Thank you, sir. Good evening, ladies and gentlemen. We are delighted to showcase the strong financial performance of Q2 FY25 and H1 FY25. Here's a snapshot of our financial outcome. During H1 FY25, our revenue increased by 32.51% from rupees 954.4 crore in HY FY24 to rupees 1264.6 crore in H1 FY25, driven by expansion and strong SSG. Gross margin stood at 15.28% and EBITDA stood at rupees 9.11, amounting to rupees 115.2 crores. PAT grew by 38.77% from rupees 47.05 crores in H1 FY24 to 65.29 crores in H1 FY25. SSSG in H1 FY25 stood at 17%. In H1 FY25, Bihar contributed the most to our revenues with 82%, followed by Jharkhand and UP contributing 11% and 7% respectively. In Q2 FY25, our revenue recorded a YOY increase of 20.03%, reaching rupees 375.85 crore in Q2 FY25 from rupees 313.13 crore in Q2 FY24. Our gross margin stood at 15.42%, driven by optimal product mix. EBITDA for this quarter stood at 30.06 crore against 23.06 crore in Q2 FY24, and EBITDA margins for this quarter stood at 8% as compared to 7.36% in Q2 FY24. The profit before tax for this quarter stood at 15.98 crores, up 29.71% from 12.32 crore in Q2 FY24. And the profit after tax for the quarter stood at 12.21 crore, up by 26.79% from 9.63 crore in Q2 FY24. We can now open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devanshu Bansal from Emkay Global Financial Services. Please go ahead.
Hi, sir. Good evening. Thanks for taking my question and congratulations on a good H1 performance. Sir, you mentioned that Q2 is a seasonally weaker quarter and there was a good amount of festivals in Q3 till date. So any outlook that you can provide, as in how have been the trends in Q3 till date, maybe like festive comparison for 30 days between Navratri and Diwali?
It has been good. We have done good for in this period.
And qualitatively, sir, growth is in better than Q2. Has it improved? If you don't want to sort of provide some qualitatively, if you could sort of suggest.
That won't be proper, but we have done well.
Understood, sir. Understood. And this time around, specifically for Q3, wedding dates, etc., are relatively higher versus last year. So are you optimistic of a continuation of this strong trend in the rest of Q3 as well? Or maybe the H2?
No, well, definitely, because most of the weddings are lined up in this quarter itself. So we are definitely very much hopeful that this quarter is going to be very strong.
Understood, sir. Second question is specific to some of the industry trends, sir. There are players like Haier, Voltas, sort of doing much better versus the Korean heavyweights. So what does this actually mean for players like us in terms of average selling price, margin negotiation, etc.? So if you could just throw some comments on this, please.
When you have got good and very good and high competition, you can derive better margins. That's for sure. And it's good that many companies they have established themselves in this market.
Understood. And is this the reason for flat ASP also? Because I guess the Korean heavyweights may be at higher ASP, and since the other competition is gaining ground, so is this sort of leading to a flattish kind of ASP for us in H1? Is this a right way to look at it?
I won't put it like this, but ASP decline in ASP is because of, in fact, drop in prices. And prices have dropped this time. Like ASP has gone down due to decrease in most of the categories, especially AC, refrigerator, washers. It has gone down by 2%. Mobiles and laptops, it has gone down by 3%. And even, as you must be aware, even brands like Apple, they have come with new launch Apple 16, which is 10,000 cheaper than launch of Apple 15 Pro Max. So
right.
This is having that, we are not having any effect of inflation on our revenue growth in H1 FY24.
Understood. Sir, one last question from my end. This is not specific to the consumer durables industry, but from automobiles perspective, at least the area of operations that we operate in, there is a general commentary that the NBFC financing is sort of reducing in those areas because the loan to values, etc., were relatively higher, and there are some level of defaults that have happened. So are you seeing some challenge in the consumer durables space as well in terms of financing?
In fact, they have become more aggressive, I will say, for consumer durables. More competition has also come in. And I think just opposite to what you are saying for automobile industry, consumer durable is very, very good. Yeah, and they are very aggressive, these finance companies, consumer finance companies.
Fair enough, sir. Thanks for taking my questions. I'll come back in the queue for follow-ups.
Thank you. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Percy Panthaki from IIFL Securities Limited. Please go ahead.
Hi, sir. Couple of questions on the accounting front. So one is on a YOY basis, your number of stores have increased by about 20-25%, but your depreciation is for the quarter YOY increased by more than 50%. So what is the reason for that? That's question one. Second question is that if I look at your capex for the first half and divide that by the number of stores that you have opened up, it comes to about 1.2 crore per store, which is like double of what we typically do. We typically do about 60 lakhs per store. So these two questions, if you can just throw some light on, please.
Depreciation, I don't think it has gone up by 50%. It is only because of application of Ind AS amortization. So this is the reason whatever is the depreciation has increased. And what was your second question? You asked that our per store, you are dividing our capex to the store, right?
Correct.
But we are not factoring in that we are at the same time we are renovating our stores as well. You are aware that we are 25 years old company. We are 25 years old company. So more and more stores are being renovated as well as we are opening new stores. So you
got it.
You strictly cannot divide my capex with store count.
Got it. On the first part on the depreciation, I understand it is the Ind AS effect, but the Ind AS effect will also be sort of in line with the growth in the square feet or the growth in the stores, right? So if that is like 25%, why is the depreciation including the Ind AS number going up by 50%? We can take this offline also in case you don't have the...
But our increase in store is the 26 YOY. And
right.
So why it will not go up? But our rent expenses will come in the amortization and depreciation of our capex has also gone up. So I think it has been calculated by experts.
Okay. Okay. Got it, sir. Got it, sir. Secondly, just wanted to understand, in terms of margins, we have done somewhere around 9.1, 9.2% margin for the first half of the year. Should we take increase in the second half, given that it's a festive season and we would get some operating leverage, or even the gross margin might be better? What are your thoughts on that, sir?
It all depends on how market behaves from now onwards, because as you are also telling us, we are also guiding that yes, festive year, this marriage season is lined up in this quarter. It all depends how it behaves. Right now, it will be premature to tell me anything or give any guidance for that.
Okay. Okay, sir. That's all from me. Thanks and all the best. You can return back to the queue.
Thank you. Percy.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Aniruddha Joshi from ICICI Securities Limited. Please go ahead.
Yeah, thanks for the opportunity, and congrats for a really great set of numbers. Sir, the question is, one of the durable company has also posted such strong growth rates, and in fact, in general, in consumption, we are hearing, in a way, commentary from the companies that there is a massive slowdown. So, have we materially gained market share during the quarter from the other retail companies, or how should we read about the numbers? And that is question number one. And question number two, at least in Western markets, we are seeing various companies, including Apple or other IT companies, other laptop companies, etc. They are setting up their own stores also. So, do you see that kind of a trend happening in eastern part of India? And what will be our strategy in that case? Yeah, two questions.
So your question number one, actually, we don't think that.
Hello.
But what was your second question? What was your first question? Just give me.
Yeah, so basically, means our growth rate.
Now I remember. Actually, you said that there is a slowdown. Yes, there is a slowdown, definitely. Because had that slowdown not been there, we would have grown by 30-35%. I'll put it like this. So we are doing extremely well in whatever slowdown has come, and slowdown is there, of course, but we have been trying not to lose our market. And second, when we say that any brand store will come, actually brand store, they will, I think, in the geography where we are operating, it will be the last thing that these brand stores are going to come. Obviously, they will, what they say, what in our discussion with them, they say that they will be present only in metros, big cities, not small cities, like Apple Store or anything, whatever you are thinking about. So we will be totally insulated in this part of geography of India.
Okay, sure, sir. Understood. And lastly, third question. We are also seeing there is an online component also growing. Means, for example, one of the peer, like let's say Chroma, is also presenting in a way online sales also. So I guess regarding our policies to get into that market, or in a way we are seeing quick commerce, at least in products like kitchen appliances, we have seen quick commerce is doing very well in a city like Mumbai also. So obviously it may not be now, but in a period of let's say 1-2 years, it may spread to the cities in Eastern India also. So what will be our strategy in that case, or whether Aditya Vision has any plans to get into online business model too? That's the last question. Thanks.
Not at the moment. Aditya Vision is not thinking about having online market as a whole. But as far as Chroma, or as you said, we don't quote many brands. But as far as other competitors concerned who are present online also, we don't think that we have been saying all the time that in this part of India, people prefer seeing goods and feeling it, and it is like a family affair for going into a store and buying. So we do not, in fact, it is not going to impact us. And similarly, actually, it's not that these big brands are not present in the areas where we are operating. They are. But because of our strategy, we have been able to give continuous growth.
Okay, sure, sir. Understood. Very helpful. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Manoj Gori from Equities Capital. Please go ahead.
Yeah. Hi. Good evening, everyone. Thanks for the opportunity. I have one question. So, like you just highlighted, sir, that there has been some slowdown, but obviously because we have been taking number of efforts and initiatives in terms of store openings and various other things, we have been relatively doing better versus the industry. Now, obviously, even you highlighted on Q3 that festive season and also the marriage season seems encouraging. But from a medium-term point of view, when we say that this year monsoons have been good, obviously we just want to understand that what's the seasonality part with regards to good monsoons leading to higher incomes for farmers. What kind of seasonality have we seen in the past? Because obviously you are in this market for more than 25 years. So just want to understand, because that can accelerate our growth, even like more on an SSG point of view from a medium to long term point of view.
It is, Manoj, it is our good fortune that monsoons have been very good in last so many years in this part also, and as a whole, most of the part of India. So monsoons, of course, they play a big role because, as you know, we are present in tier 2, tier 3, and even tier 4 cities, towns, or as they. So we definitely we believe that we are going to do very well in future, and these totally unpenetrated areas are going to give us very good results going forward.
Right. So, sir, secondly, one last question on the profitability or probably on the performance of stores in UP. Internally, obviously, we would have some expectations how the stores would be operating, how that is panning out versus our expectation, and probably has there been a renewed or increased confidence behind store aggression into those markets? That would be helpful.
Yes, we are very much bullish on UP operations, and our UP operations are doing very well. And in fact, we are already present in around 15 districts out of 75 districts. And most of our 18 stores where work is in progress. Most of the stores are from UP itself. Like we are now capturing entire central UP as well. Lucknow being first, where we are going to open 6 stores at one time, and then Bahrain, another Gonda, something. These districts we are covering. So we will be, in fact, by end of this financial year, we'll be covering entire central UP as well. So we are doing very well, and we are very bullish also, and there is a lot of potential in UP, which we think that we have been getting good response.
Thanks, sir. That was very helpful, and wish you all the best.
Thank you so much, Manoj.
Thank you. The next question is from the line of Richa from Equity Master Research. Please go ahead.
Thank you for the opportunity, sir. So my question is, I just wanted to ask, what was the ESOP related expense in the first half of the year, and what does the trajectory look like this year and next?
ESOP related expenses was 2 years last quarter, YOY, in Q2 FY24, whereas ESOP expense is only around 50 lakhs for this quarter.
And how do you see it for the entire year and FY26?
So it will, of course, we divide it in the quarter, so it will be 50 lakh in each quarter.
Okay.
50 to 50 lakh each quarter.
Okay. And sir, what is your outlook on ASPs, considering that the premiumization trend is there, but new categories perhaps you are adding. So what kind of product mix do you envisage, and at what rate our ASPs can grow, if at all?
I have already spoken on ASP that because most of the prices have come down. Most of the categories that prices have come down. So our ASP has dipped by 1.3%. But we are very much hopeful that this new premium product is going to have better ASP going forward. So we are continuously trying to increase our ASP.
Okay. And sir, we are, I think, already number one in Jharkhand, right? Just wanted to understand what kind of market shares have we captured in the new geographies in the states of Jharkhand and Bihar so far?
Bihar, we have already, as per manufacturers, we have already captured around 60% of market. And in Jharkhand, in only 2 years of operation, we have captured nearly 15%.
Okay, I'll come back in this.
Okay.
Thank you. The next question is from the line of Amit Jeswani from Stallion Asset. Please go ahead.
Hi, Sinaji. How are you?
I'm good. How are you, Amit?
Good. Thank you so much. Sinaji. Sinaji, decent set given the consumer slowdown. Agar consumer ठीक हुआ, then what would you say that 30% kind of growth would be a structural growth in our business? अगर आप 20% store खोलते जाओ तो, सिन्हा साहब? Because it looks like अपन का 20% तो store growth ही होता जाएगा हर साल. That is the new normal, I think.
तो ये अमित एकदम तुम bang on आप सही हैं. We are looking forward to such type of growth, which when we are in fact we have been doing in past 10 to 15 years. So हम लोग तो we will look forward to growth of 30%, 35% continuously, and we hope that we are going to achieve it as well.
क्योंकि सर मैं देख रहा हूँ सिन्हा साहब that our SSG is now the highest in the retail pack. If you see, मतलब खराब consumer sentiment में भी हम first half में अगर 15-17% SSG कर सकते हैं, that means we are that is a normal thing for us, that 15-17. You think सिन्हा साहब this kind of SSG is sustainable? ये जो same store growth है?
आपको अमित जी मैं आपको ऐसे समझा सकता हूँ कि जो हम बार बार बोल रहे हैं, पहले भी अर्निंग कॉल में बोला कि हम लोग वी आर ऑपरेटिंग इन वेरी अंडर पेनेट्रेटेड मार्केट, इसलिए एसएसजी तो हाई रहेगा ही, बिकॉज इट्स नॉट दैट वी आर इन अ वेरी क्राउडेड मार्केट वेयर ऑलरेडी ये एग्जॉस्ट हो चुका है वहाँ का डिमांड, तो यहाँ डिमांड तो आता ही रहेगा. दिस इज द रीजन आवर एसएसजी इज वेरी गुड, और हमको लगता है गोइंग फॉरवर्ड ये रहेगा ही ऐसा ही एसएसजी हम लोग का.
Got it. And सिन्हा साहब ये यूपी में जैसे 18 में से कितना स्टोर आप यूपी में खोल रहे हैं अभी?
18 में से करीब तकरीबन एग्जैक्ट हमारे पास नहीं है, एक सेकंड रुकिए मैं बता रहा हूँ. आई कैन टेल यू, आई हैव टू काउंट 1 2 3 4 out of it 10 stores are in UP.
अच्छा. एंड द स्क्वायर फीट जो रेवेन्यू पर स्क्वायर फीट सिन्हा साहब, जैसे अपना तो अभी फर्स्ट ईयर ही है यूपी में, बट रेवेन्यू पर स्क्वायर फीट जैसे हम 45,000 कर रहे हैं ऑन ओवरऑल आदित्य विजन लेवल, वो यूपी में हैव बी एबल टू रीच दैट काइंड ऑफ लाइक 30,000 20, मतलब ऐसा कुछ लाइक वो 6 करोड़ का जैसे हमारा रहता है, 6 करोड़ 12 करोड़ 18 करोड़ का ईयर 1 6 करोड़ ईयर.
So we are एकदम bang on whatever our guidance is, and we are doing, in fact we are exceeding those numbers. So बहुत अच्छा करेगा ये, और आपको इन्वेस्टर प्रेजेंटेशन में हमको लगता है वो मिल जाएगा आपको यूपी वाला भी.
राइट. और ये जो हम 6 स्टोर लखनऊ में खोल रहे हैं, डू यू थिंक अब तक हम रेड ओशन मतलब एकदम ब्लू ओशन मार्केट में थे और अभी हम लोग एकदम रेड, मतलब हाउ इज द कॉम्पिटिटिव सिनेरियो लाइक इन यूपी दैट वी आर फेसिंग, क्योंकि अब हम जोर से जाएंगे यूपी में? what I'm understanding.
Because I will always tell you, Amit, that is the same ocean where we were operating. It's about our thinking that it is red ocean and this is blue ocean. I'll say everything is similar to Bihar.
राइट क्योंकि मैं देख रहा हूँ वाराणसी और ये सब में तो आपने बहुत अच्छा किया जो हमारा डेटा बताता है. Now it's about ये market and the rentals will change, right, in Lucknow and all these kinds of things, but revenues will also change, like revenue.
Yes, sir. So rentals will definitely slightly higher in Lucknow as it is the capital, of course, and it's a very big, huge city also, and the population is also very big. So market is also, I think, quite large, and again, penetration level is low even in UP and even in, if we'll say that even Lucknow also, compared to the population. So I think we are opening 6 stores only with this expectation that we must be known immediately, quickly, and our strategy slightly shifted. As I can tell you that we are opening more stores in H2. And this is as per our strategy only, that because when we open more stores in H1, so adding OPEX, we are adding OPEX with no great addition in revenue as footfall remains low in Q2. But if we open more stores in H2, all branches open will be ready to enter into Q1, which remains our best quarter and with best, busiest footprints as well. Not only our new customers will come to know about us very quickly, but also our new branches will start breaking even more quickly due to the shift in policy. But anyway, we are not saying that we can try to push opening ahead, but we'll be keep opening stores as an opportunity in H1 also.
Got it. So now basically going forward, हमारा H2 में ज़्यादा store खुलेगा, H1 में थोड़े कम stores खुलेंगे. Very clear.
और उसका strategic reason भी मैंने बताया.
Right. Very clear. One more thing, Sinha साहब, जैसे got it. So 18 stores you said will be opened by January. उसके बाद भी और store खुलने वाले हैं कि 18 पे रुक जाएंगे this year?
रुकेंगे तो कहीं भी नहीं. But you always exceed my expectations. So yes, by January, February, these are already work in progress. So maybe we will be opening more stores also, but right now this is the situation, and these stores will be functional by latest by February. So, but our strategy of continuously opening may exceed whatever I have been saying.
Got it. Good luck, Sinha जी. आपके साथ कभी सुनता हूँ अच्छा लगता है. Feels good and happy. Good luck, sir.
Same here, Amit. Okay, bye.
Bye.
Thank you. The next question is from the line of Vivek Gautam from GS Investments. Please go ahead.
Yeah, congratulations, sir, for good performance in a otherwise slow quarter and seeing the competition. For us, the competition companies, our performance really good, sir. So my question is about the penetration level in India. I was reading somewhere in that the penetration level of ACs, especially in compressors and related products, is hardly 7% in India versus 62% for China. And then thanks to this, even in our geography, it might be even lower. So, and what about this? So our potential to more growth, I just wanted to have an idea. And how was you finding the situation on the ground level from the cooler to AC movement? Thanks to the financing and other things, are people really in the lower class and even lower middle class, they are all opting for ACs?
I'll not say exactly they are more and more people are from cooler, they are shifting to AC, because cooler has got a different category altogether. But it is true that because of easy financing, the marginal people who decide between cooler and AC, they go for AC. So this market is bound to increase manifold, and as you said, that penetration level is extremely low. It's around 2% in this side. So it is plenty of potential is there.
I would also like to congratulate you on establishing Aditya Vision as a big brand, and I believe now the different OEMs must be having a fight among themselves to have a better display and relationship with Aditya Vision. So the effort which you have put in, and how is it acting as a differentiating factor for us even in Bihar and especially in the new geographies like Jharkhand and UP, the Aditya Vision as a brand?
Your previous, whatever you have been doing, actually manufacturers are very, very important in this retailing, this format of retailing. So manufacturers, they keep on supporting you. And because of your long history, like your company, Aditya Vision is 25 years old. So they have been having this relationship for 25 years. So they know our potential, they understand how we work, they understand how we can achieve results. So they are very much in line with whatever we do.
And also, congratulations on the NSE listing. You are walking the talk. And as such, people might be, many of our pledging and other facilities are also available for our script. So far, many of the brokerages and other people don't provide loan against our shares. So hopefully things will move in that front also, sir. Congratulations once again, sir. Keep up the good work, sir.
This is the always हम लोग का यही कोशिश रहता है कि we should give more and more, create more and more investors value.
Yes, sir. Absolutely. Fantastic, sir. I've been tracking your company since SME listing, and the journey you have created is fantastic for whole host of your investors and especially the employees also. It's really remarkable. The first big success story from Bihar, and employees are also getting the ESOP, sir. Thanks a lot.
Thank you, Vivek. Thank you so much for your good comment.
Thank you. The next follow-up question is from the line of Devanshu Bansal from MK Global Financial Services. Please go ahead.
Yes, sir. Hi. Thanks for the follow-up opportunity. Few bookkeeping questions, sir. In Q2, what is our SSG? H1 we have declared. We know the Q1 number. What is the SSG for Q2 specifically?
SSG for Q2, you are asking, isn't it?
Yes, sir.
SSG for Q1 or Q2?
Q2.
Q2 has been 10%.
10%. Okay.
And for half year, H1 FY25, it has been 17%.
Yes, sir. Yes. Yeah. And secondly, I wanted to check, AC specifically as a category has done very well. You shared 56% growth for ACs in Q1. How has been the trend in Q2, sir?
It has been very good. In fact, a similar trend has been observed in Q2 also.
Understood, sir. And last question from my end. We are planning to add quite a few number of stores as well as March ending typically sees an increase in inventory due to seasonal fluctuations. Do you foresee increase in debt, and what are your expectations on closing debt levels by year end?
Actually, as you will find that we are clearly still we are net debt free on sitting on this inventory also. With our cash resources, we are still net debt free company, even on this size of inventory. So we don't foresee any unrealistic use of working capital.
Okay. So if I understood, my question was more from FY25 ending debt levels.
March, FY25 March, I can understand that you are asking at that time we'll be having the requirement of more and more inventory. Yes, so you are asking about the debt, short-term debt. Yeah. So it will be used actually most of our working capital limits are still intact. If at all we are going to require any additional funds, we are going to use it.
Understood. Thanks for taking my questions. Yes, sir.
Thank you, Devanshu.
Thank you. The next question is from the line of Sakhi Pratap from Pratap Securities. Please go ahead.
Hello. Hi. Thank you for the opportunity. Sir, I just wanted to understand the inter-segmental performance. So basically, amongst all the consumer durable products, if you could just highlight in detail how air conditioners performed and washing machines, refrigerators, and other digital devices. If you could just go into the depth, how was Q2 for all these different devices, that would be very helpful.
I'll tell you. Large appliances contributed to around in H1 FY25, or you just want to know this? Yeah. In Q2, category. I'm having right now having figures for category contribution for entire H1. The large appliances have contributed 65%. Digital gadgets came down by 2% to 18%, due to decrease in prices of mobile and laptops, and extended summer persuaded people to delay their purchases of mobile and other products. And other 17% rise of 2% against last year due to rise in sale of seasonal products such as coolers, batteries, inverters, etc. So H1 FY24 LY was almost same. Large appliances 65%, digital gadgets were 20% compared to 18% this year, and others were 17% and 15% last year. Yes.
Got it. This was helpful. But if we just put aside the numbers, if you could qualitatively explain how did the quarter look like on a general level, did you see more air conditioners flowing out, or because it was monsoons, were cooktops and soundbars did well, did washing machines?
ACs have continued to do well, and followed by refrigerator and washers. Washers was a very good category.
Washing machine?
Hello?
Sorry, ACs continued to do well, followed by?
Refrigerators.
Okay.
And televisions, and followed by lastly washers.
Okay, got it. Any other trend that you observed around the intersegmental product?
One very good trend which we are observing is that sale of ACs is very steadily spreading to the entire financial year, which previously it was very much concentrated in Q1. Now we are seeing that it is spreading to entire financial year. This is what trend we are observing.
Okay. Got it. Thank you so much, sir, and congratulations on the great set of numbers.
Thank you.
Thank you. Ladies and gentlemen, we'll take our next question from the line of Lakshmi Narayan Mishra from Baroda BNP Paribas. Please go ahead.
Hello, am I audible?
Yes, very much. Boliye Lakshmi ji.
Congratulations, sir, on good side of numbers. Sir, I have one question. So, if you see last 2-3 years, they have been very good credit cycle period in terms of asset quality, and because of that, we saw aggressive lending by NBFCs, fintechs, and banks, for that matter, in underserved banking or credit areas, which typically was rural or tier 2-3 cities. So now, given that RBI has pressed the button on retail loans or credit cards due to the stress which is building there, so are you seeing any sales getting rejected because of credit not being available? Any insights on that which you are seeing on ground?
Mr. Lakshmi, actually there is no impact here in this part of the country. I mean, where we are operating, the areas in which we are operating. So, in fact, they have become very aggressive, these NBFCs or retail financiers, and many players have also come in. In fact, a new player, as TVS, they have got in. So they are all, in fact, vying for market. And I don't think that there is any problem in their lending or credit is any problem.
Okay. So this quarter was bad purely due to demand situation. So so no issues on credit side. So credit is still available. This is what you are saying, right?
And our quarter was first, it was not bad. We gave 20% growth.
No,
But
no,
anyway,
I mean, based on our standards. So I'm not comparing with theirs.
I'm really happy.
Set by ourselves.
I'm really happy. But yes, of course, we would be striving to do much better.
Yeah. Great. Okay. All the best, sir. Thank you so much.
Thank you. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, we'll take this as the last question. I now hand the conference over to the management for closing comments. Management?
No, if you questions are over, huh?
Yes, sir.
Okay. Thank you. We trust that we have addressed all your inquiries to your satisfaction. If you have any remaining unanswered questions, please don't hesitate to contact our investor relation agency, Go India Advisors. They will be more than happy to assist you further. Thank you so much. Take care. Bye-bye.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.